welcome to the Small Caps Podcast, where we discuss news and information related to ASX-listed companies and financial markets, keeping investors informed. Note that the content in this podcast is not financial or investment advice, and be sure to head over to smallcaps.com.au to get the latest market news. Now, without further delay, here's today's podcast.
Welcome back to Small Caps. Today, I'm bringing you an upcoming IPO. Well, upcoming almost immediately. On Monday, the 24th of May, the IPO will open. It is a Barton Gold. The ASX code will be BGD. B for Bob, G for Gold, D for Dingo. Joining me today is Alex Scanlon. He is the Managing Director and CEO. Alex, great to see you. And welcome to Small Caps. Let's talk about Barton Gold and what you've got and who you are. You are a South Australian-based gold explorer. You've got a couple of projects, which I want to talk about, but also a little bit of infrastructure there. So let's just talk a little bit about what have you got in South Australia and why the IPO now?
Okay, well, so we've got a collection of assets that are right in the center of the Central Gawler Craton. So what is the Central Gawler Craton Gold Province? And what this is actually a very richly mineralized jurisdiction, but one that has historically been underexplored, if you will. So looking back historically, this collection of assets has been owned by a number of different owners through time. And we have, to sort of put this in context, where we are focused are the Tarcoola and Tunkillia projects. So these are two very large scale exploration projects. Tarcoola is about 1,200 square kilometers. Tunkillia is about 1,360 square kilometers. And the work that we've done in these areas over the past couple of years indicates that the large-scale exploration potential is much larger than was historically known. So we've essentially collected these assets. We've done a lot of work looking at about 30 years of historical data, both public and private. We've added a whole new layer of high-resolution work, structural work. We've done new high-resolution aeromagnetics. We've done a seismic reinterpretation over the Tarcoola project. And what that's done is it's opened up our understanding and established a new structural understanding of that Tarcoola project. And at Tunkillia, what we've done is reanalyzed what is a very large mineralized zone, but which itself sits within about 30 kilometers of shear zone structure. And so in terms of timing an IPO, now is, I think, from both a market's perspective, but also this sort of the stage of work that we've done in these projects, now is the correct time to bring these assets to market, raise a larger amount of capital, and then really get after quite aggressively that large-scale exploration and discovery potential. At Tarcoola, we've got about 14 kilometers of targets. At Tunkillia, we've got somewhere between sort of 10 to 30 kilometers of targets. So now is really the time to do that. Obviously, we think it's a very strong, very promising gold price environment. And we've also, during this time, built a very strong, sort of forward-looking and experienced team. We've got a lot of experience building companies and projects. So it's really time to move these assets back into the public market and move forward from there.
You talked about the board. I want to ask two things. Let's quickly go to the board because there's a couple of very experienced people on the board. And ladies and gentlemen, you know what I always say, you can have the best assets in the world, but you've got to have the right team behind it. So Mark Connolly and Richard Crooks, both very, very competent people. Just talk a little bit about their background.
Yeah, so we've been really focused on building the right team to look at taking us forward, not just for where we are today. So we're big fans of having a 2, 3, 4 year forward sort of development focus in terms of the skills and expertise that we bring to the board. So obviously Mark Connolly is our chairman, very well known in the gold space, both as a company developer and a project developer. Probably most recently and best known for the merger of Papillon Resources and B2Gold. Prior to that, he also was responsible for the merger of Adamas Resources and Endeavour Mining, and is currently involved in a number of other sort of mid-tier gold developers, Calidus, Chesser, Ochlo, for example, as chairman. Richard Crooks obviously brings a great deal of experience to our board as well. I've known Richard for quite some time now, and we're very pleased to have him on the board. His experience is this incredible mix ranging from actual hands-on development expertise at the Ernest Henry mine, both involved in that development and as the mine manager, but then also, of course, moving through the banking and financing side with Macquarie, but then also into the private equity side as well with EMR Capital. Now he runs Lionhead Resources. So we've got this a very, very, very strong group of people on our board, a lot of other corporate governance and legal expertise, as well as technical and technical commercial expertise around sort of infrastructure as well. So we are set to look forward. Obviously, today we're focused very much on that large scale discovery potential. We want to expand the footprint of these assets. But once we do that, we want to make sure that we're positioned to look forward into and through studies and sort of preliminary development planning, because we want to make sure that we're not essentially stuck slowing down when we're trying to sort of accelerate and amplify the true potential of these assets.
Okay, so you acquired the assets in 2019, I believe, and you've raised some money privately, close to $4 million. So you've done a lot of foundation work. I'm curious, because we've mentioned these projects have been in other hands before. Mm-hmm. You've done a lot of the foundation work. What I want to know from an investor's point of view, you talk about large-scale discovery. Western Australia has been in the news. Victoria has been in the news. South Australia seems to have just been a little bit quiet. Do you think that that's because people haven't done the exploration and they haven't done it in a systematic way? What's your view on that?
Yeah, I think you touched upon a couple of things there. South Australia became very interesting and exciting from the mid-90s. So the Challenger underground mine was discovered in 1995. That mineralization was discovered in 1995. The Tunkillia project, which we now own, was discovered in 1996. And all of a sudden, everybody was very excited about South Australia. And this is a very richly mineralized area. Obviously, about 200 kilometers to the east, you have Prominent Hill, you have Olympic Dam, different geological terrain, different style of mineralization. But certainly there was a lot of excitement at that time. And then I think what happened is a combination of factors. Late 1990s, gold price declines. Yeah. Also, as you mentioned Western Australia. Everybody got very, very, very excited about Western Australia. And I think the story really became kind of go west, young man, right? And Western Australia, for no, not for lack of good reasons, has become sort of the market focus for gold exploration. And successively from that period of time, these assets have sort of passed through a number of owners that have either had essentially a bias either to production elsewhere in their portfolio or exploration elsewhere in their portfolio. So these specific assets themselves have ended up basically out of focus, under focused and undercapitalized from an exploration standpoint. And if you actually go back and look at the history of these assets, what is very interesting is sort of two things. One, back in the 1990s and in some cases early 2000s, there were a number of shallow, high-grade, very interesting drill intercepts and samples taken. Number two, essentially from the year 2000 onward, no exploration work has been done on these assets. So at Tarcoola,
hang on a second. So sorry, Alex, to interrupt you, but you're saying there's been no exploration since the year 2000? That's so 21 years.
In terms of true exploration, no. So at Tarcoola, for example, there's a lot of interesting historical data. So Tarcoola is surrounded. Well, Tarcoola has hundreds of historical shallow mining methods where people were mining 30, 40, 50 gram per ton in these quartzite structures that were coming to surface. But that's on essentially the mining lease, which is a very sort of a small area. The broader exploration license, which is another 1,200 kilometers, has not had any exploration on it since 2004. Now, this is despite having a number of very interesting drilling intercepts, shallow, high grade, very broad, 5, 10, 15, 20 meter intercepts in the late 1990s. They simply weren't followed up. And when you look at Tunkillia, now Tunkillia is about 70 kilometers south-southeast. The discovery of the current, our cornerstone deposit there, the 223 deposit, was very exciting at the time. So it was about 1996. There was a sort of a drilling program that drilled along the Yarralbrinda shear zone over probably about a 6 or 7 kilometer stretch of that shear zone. And that drilling program, I think one thing that's really important to note is when you look at the historical drilling database, the average depth of drilling per hole was only about 77 meters. So drilled at an angle, the average absolute depth is probably something around 60 meters. Now, this is an area that has somewhere between 30 and 50 meters of cover in it. So in many cases, there was a lot of drilling that was coming through and intercepting very interesting mineralization, but only intercepting 5, 10 meters of it. And that drilling essentially was never followed up. what happened from the year 2000 was that with the discovery of in 1996, the discovery of the 223 deposit, from the year 2000, the vast majority of drilling there was actually just infilling that deposit. So you had this huge array of very interesting high-grade hits all around it, and kilometers of apparent mineralized hits and strikes, but those were never followed up. So it gives us, in both of these areas, we have some very interesting sort of historical data as a roadmap, and we've taken that and added now a lot of modern work. So at Tarcoola, we've done an ultra high resolution aeromagnetic survey over that project area, as well as a new 2D seismic reinterpretation of the area using an east-west and a north-south line. Now, the seismic processing and sort of the basically programs that use to process this data are sort of exponentially better than they were 20 years ago. And what we've unlocked at Tarcoola is now a completely new regional structural understanding that was not previously known. And what that does actually is it shows us what we can see is these very large intrusive bodies which come up and press against the Tarcoola formation, which underlies the majority of our tenements there. We essentially have these shallow areas of the Tarcoola formation immediately under our Tarcoola tenements. And passing through that, in the case of the existing brownfield mine that's there, which is the Perseverance mine, the controlling structure there is the Perseverance shear. And that shear comes down through that Tarcoola formation and plumbs directly into one of these large intrusive bodies. So you've got this intrusive body, a source of heat, a source of pressure, a source of fluid pressing up against this mineralizing basin, and a potential fluid pathway that meets that. What's very interesting is the work that we've done now over the last 2 years has identified a dozen or more parallel and cross-cutting structures, which are perfectly analogous to that Perseverance shear. So they pass through the same mineralizing Tarcoola formation, and they plumb directly into those same intrusive bodies. So that completely changes the story around Tarcoola, where traditionally, historically, people have focused on this one small area of mineralization, which was mined and very profitably and successfully in 2018. We look at this now, we always had this suspicion, but what we see now is that instead of this being potentially just, X marks the spot and we simply hope that we can grow X, what we look at is a series of parallel and cross-cutting structures that suggest there might be a dozen or more sort of analogous X's to that. So the real potential to have a series of higher grade near surface open pits and then potentially future underground operations as well. So it is a case, I think, of looking at historical data from a Pathfinder perspective and actually going back and doing some of that foundational baseline work that really ties all this stuff together, because now we have that, now we understand why at Tarcoola we had all of these discrete high-grade near-surface intercepts everywhere that didn't have a uniting theme. At Tunkillia, again, it's a similar situation. We've gone back and looked at, we've looked at all the historical data. We've completely remodeled the mineralization around that deposit. I think more recently, historically, it had been modeled with a very low outer wireframe threshold. So an outer wireframe threshold of 0.1 gram per ton historically. And what that did was put a very low grade halo around the body of the resource. And it also didn't have any subdomaining internally. So you had a lot of dilution at the edges of the resource, and you had a lot of dilution internal to the resource, a lot of grade smearing. And so you couldn't really, articulate the attractiveness of the resource because you couldn't sort of identify the more interesting features. We came in and did a full QA/QC analysis of all historical data. We actually sort of rejected about a third of the data. We applied a much higher outer wireframe cutoff grade, and we very tightly subdomained the modeling of the deposit. And what we interpreted, what we identified, were a number of much higher grade zones in the deposit. So the mineralization at Tunkillia is this very broad, highly continuous shear-hosted mineralization. And on the eastern margin, it tends to be bounded by mafic dikes. And at some of the points where that mineralization contacts mafic dikes, what you get are these high-grade zones up to 5 and 10 gram per ton that are significant. It looks like they're about 5 to 10 meters in width and potentially 20 to 50 meters in height, and sort of vertical relief. And these occur where you get those contact points and essentially vein swarming, where the mineralization meets that contact point. So that really kind of changes the perception of that deposit, changes the potential for that deposit. One, you can look at, a more optimized development design to extract higher grade zones first. can optimize, obviously, of course, the development planning, but the economics of such a project. But two, it gives us the ability to start looking for replications of that fingerprint, replications of that type of signature throughout not only that deposit, but in the immediate vicinity of that deposit. And this is where we go back to that sort of historical pattern drilling. So again, looking outside of that deposit, the 223 deposit, which is that Tunkillia deposit, it's presently 965,000 ounces at 1.15 gram per ton. So we've modeled that inside of an open pit, amenable to large scale, efficient, low cost open pit mining. But when we look along strike and we look in parallel to that, both the western and eastern demagnetized margins of that shear zone have readily apparent mineralization from that historical drilling. And what's interesting is a lot of the geophysical work we're doing is suggesting there may be even faintly magnetic signatures to some of this mineralization. So we're starting to look for different ways that we can use more advanced modern geophysics to predict where mineralization offsets occur. But we're also then looking at going back and following those highest priority, sort of lowest hanging fruit opportunities to convert shallow, known historical mineralization into new JORC resources. So not just chipping away at the edges of the existing resource, but creating entirely new bodies of resource. We want to demonstrate something which we've suspected for several years, but we want to demonstrate that not only in the immediate vicinity of the 223 deposit, there's potential for this to be a multi-million ounce camp, but we then want to systematically work our way down the deposit, because this area, the 223 deposit, is only 2.5 kilometers long, and it's unconstrained to depth and along strike. The structure which hosts it is known to extend a further 7 kilometers north and south, geologically, geophysically, and geochemically. So we want to work through that, see if we can turn that into a hub of multiple open pitable deposits. And then we've got another 25 kilometers of strike to the south on that same shear zone. We've been identifying a number of areas that have some very interesting dilation, similar cross-cutting faults and structures to what we see in that 223 deposit area. So we think by applying, again, this sort of same systematic exploration, different approach across Tarcoola and Tunkillia, we can really open up, I think, not only our understanding, but the market's understanding of the true long-term development potential of these assets.
Well, it's interesting. I mentioned before, and here's where I want to get in a quick deep dive because we're running out of time. The offer opens on the 24th of May, closes on the 11th of June. There's a small window, ladies and gentlemen. But what I want to know is when the money's in the bank, mm-hmm. I want to know what news flow, what are you going to do with that money? Are you going to be immediately going into drilling? You've got some foundation work done. You've acquired it in 2019. You've done a lot of the base work. You mm-hmm. understand the structure a bit more. If I put my hard-earned money in, what are you going to do with it?
Yeah, so in 2020, we also did a test drilling program at the southwest extensions of the open pit Perseverance mine at Tarcoola. So the southwest extension and the depth extensions of the Tarcoola open pit mine, their Perseverance mine, are full of and surrounded by numerous high-grade, in some cases broad and high-grade intercepts. So that for us is sort of immediate low-hanging fruit to look at a priority drilling target. Now, one thing to note, when we were test drilling the existing structure there, we essentially accidentally discovered an entirely new gold zone. And that's immediate. So we've called it Perseverance West. It's offset by about 150 meters from the main Perseverance shear structure, and it sits also at the south-southwest extension of the open pit. So again, really goes back to the story of how undercapitalized exploration was. Even at the edge of the pit, there was a gold zone that wasn't recognized historically. So when we complete the IPO, as we mentioned, we're hoping to have the shares admitted at the end of June. We have already prepared a very extensive geophysics and exploration program, a geophysics and drilling exploration program that would kick off immediately alongside IPO. So first cab off the rank, so to speak, is Tarcoola. We will be going and testing some of those south-southwest extensions, looking to build out that Perseverance West gold zone, so to additional depth and strike. None of that area, none of those high-grade hits are actually yet in mineral resource. So if you look at our presentation and our prospectus, of course, what you can see is this just huge array of high-grade hits. So we'll be looking to sort of see if we can put that together. We'll also then be looking at stepping out and testing some new structures in the immediate vicinity of the mining lease. There's a number of sort of analogs as we mentioned, to there's this sort of regional wide series of analogs, but there are multiple of those just on the mining lease itself. So these are things we've identified using geophysics already. So at Tarcoola, we will be doing a combination of additional geophysics to continue to sharpen our sort of 3D understanding of the structures around and on the mining lease and on the exploration license. We'll be doing some initial drilling around the pit and then test drilling of some of our regional targets to get out and look at some of those new discovery areas. And at Tunkillia, we're going to be looking at drilling in priority these two project areas called Area 51 and Area 191. So these are areas where we look at this, and we've actually got enough historical drilling where we can sort of make out, if you will, a thin blanket, if you will, of mineralization. But we want to go and essentially go through and push deeper because, again, that historical drilling was quite shallow. So we will, coming back to the question, essentially be kicking off a large-scale program. We'll be looking to drill 20 to 30,000 meters over the next 12 months. That will be supplemented with and continue sort of target sharpened with additional geophysics. And we will expect, I think, to have a pretty consistent news flow and hopefully a lot of information that we can share with the market to continue to kind of like build the understanding of these assets as we move forward over the next 6, 12, and 18 months.
You are an exploration company, but you've also got some infrastructure there as well.
Correct.
Let's just touch on that briefly.
Correct. So yeah, when we acquired Tarcoola and Tunkillia, we were interested in obviously the infrastructure position in the region as well. So there's an existing mill there, the Challenger Mill, that was historically operated by Dominion, Kingsgate, and WPG Resources. We did acquire that. We were interested in having that as an infrastructure option in the region. It is the only mill in that central Gawler Craton region. With that also did come the historical Challenger underground mine because it's on the same mining lease. I think important to emphasize the underground mine, that is an operation that produced about 1.2 million ounces from 2002 to 2018. Very, very, very strong continuous structures that sort of just keep plunging at 30 degrees, to the center of the earth as far as anybody knows. Obviously, much more drill testing would be required to work out what's happening at great depth, but it's a deep asset. It's a complex set of structures. And in terms of the amount of capital that you need to invest to really reanimate that mine as an underground operation, we think we can generate much more value looking at near surface and higher grade opportunities at Tarcoola and then real scale opportunities at Tunkillia. So the Challenger underground mine is not a priority for us. We'll keep that on care and maintenance. What is interesting, of course, the Challenger mill presents an opportunity to look at one, infrastructure leverage for our own assets. Tunkillia is too far away. However, Tarcoola was historically processing during 2017 and 2018. That was sending ore to the mill. So there's a very simple haulage route, can be economically hauled. And that mill was operating at about a 94.5% recovery with a mix of Challenger and Tarcoola ore. So it's an efficient piece of infrastructure that we can utilize, but also in the vicinity around us, there's a lot going on. We have some more minority interests in joint venture ground around us. There are a number of other junior explorers working in that area. Marmota Limited have a very interesting project called Aurora Tank. Latitude Consolidated have acquired the Sky Project. And of course, Indiana Resources are very, very active in the area, very much around the Tarcoola project. But it presents some pretty interesting opportunities to look at, if the right opportunities arise. You have this very substantial infrastructure, 650,000 ton per annum mill, 240 person mine camp. There may be an opportunity to look at sort of effectively consolidating that region or rationalizing that region in terms of, production and operations, whether by, joint venture acquisition, toll milling. So it is a very valuable infrastructure. It costs us a very small amount of money to maintain in terms of care and maintenance. So while we are very much focused on the large scale exploration component, if you will, on our southern hub, we do have some real sort of intrinsic value in that northern hub, which we will think about monetizing at the right time. Okay,
Alex, we're running out of time. I said before, it's opening on the 24th of May, Monday, the 24th of May. The close will be the 11th of June. May close early. You've got a lot of interest, I understand. You'll be on the boards at the end of June. Why do you think people need to sit up and take notice of Bardock Gold? Give me 3 reasons why investors need to get involved. Excuse me, I'm losing my voice in this IPO.
quite right. Look, I think a couple of key factors. One, again, going back to historically underexplored, the potential of these assets is unbelievable. We've looked at these now for several years, and we see the potential for each of Tarcoola and Tunkillia to be standalone development projects on their own right. And I think that's something that investors will come to see and understand more as we continue to put more information out into the market. And of course, as we continue to drill and share this information and sort of help reshape the story. Two, of course, we are coming to market at a price which we hope is very attractive. So we've looked at our peers in the market, our sort of true peers that have resources of a similar size, a similar grade. And they've sort of showed us a comparable enterprise value per resource ounce somewhere in the mid-50s Australian dollars per resource ounce. We've essentially come in at about half of that. So our enterprise value coming to market is about 27 million Australian, which on our sort of attributable 1.1 million ounce resource base puts us at around $24 per ounce. So we're hoping obviously to come in at a discount, but through educating the market and sharing sort of exciting news and building to not only create value in terms of additional resources, but of course, to move from a discount to trading in line with our peers and hopefully a premium as we continue to do quality development work. And three, look, I think this is really, of course, this is true for the broader market, but I think this is really obviously a good time for gold. A lot of obvious inflationary factors coming into play. We see, quite interestingly, and quite recently in the past few days, the sort of doomsday predictions about cryptocurrencies coming true. Governments globally China openly cracking down. Governments globally starting to say, hey, we need to regulate this all a bit more. And I suspect what we'll see is perhaps a bit more of a balanced return toward institutional and retail investment in the gold sector generally as this inflation hedge.
Yeah.
Because I think there's an interesting opportunity for cryptocurrencies, certainly in the global economy and in the financial sector. But I think perhaps, if we are asking ourselves, what is actually a true inflation hedge? Obviously, gold's been that tool for several thousand years and for good reason. Cryptocurrencies may not serve precisely the same function. And there's still some settling to be seen as to how cryptocurrencies in the market evolve. So I think hopefully we'll see a return of institutional capital to the gold space. And I think hopefully quite a strong market for gold in the years to come.
Yeah, I've said for a little while now, second half of 2021, ladies and gentlemen, it's a great time for gold. Alex Scanlon, Barton Gold, unlocking the central Gawler Creighton area there in South Australia. Best of luck with the IPO, and we'll look forward to having a chat with you once you're underway with some more drilling. Thanks for joining us on Small Caps today.
Thank you very much.